Oh, brilliant. We can start. Let's go. Okay. Thanks for joining me. Uh, we've got. Hang on. Let me just see who's with us today. I think I recognise a few names. Okay, so I'm going to kick off with the dollar because it's pretty much the main focus of attention for markets at the moment. This is the dollar index, which I've written a couple of articles on lately, so you may have read them. But if not, it's just trading really, really nicely from a technical perspective, at least. So here's a dollar index. You can see what's been going on. Obviously, we all know we've had this correction. You can see how nicely this trend line goes back pretty much to the start of the rally back in August. If I scrunch this up a little bit more, you'll just be able to see just a little bit after the rally started. Actually, probably if I extended that line, it would just bring us back down to this July low. But anyway, you can see this black line here. That's the key. That's really, really working nicely. Obviously, when this correction started, that trend line held really nicely as you expect it to, but we didn't bounce too far before the market turned around and headed lower. So I'm not quite sure why we bottomed out here. I couldn't find a reason for it. Maybe you know, but I don't. I couldn't find it. Anyway, we did manage a decent recovery, and that's given us a chance to get short now. The dollar, I think, again. A big 3-day rally, nice strong rally, back up to the 100-day moving average. That's this blue line here, back up to that trend line resistance. So there's a lot of resistance going on here. It's not surprising that we spiked up and closed back below the 100-day moving average yesterday. That's pretty textbook to show a rejection of that resistance area, and of course lower here today. So as I say, all pretty textbook, really. We should have recovered. We should have retested the trend line. We got very oversold. I guess that's the reason we bounced from there. I couldn't find another level to suggest that we should have found support there, but we did nonetheless. Actually, hang on. Just let me see. There was a bit of short-term support coming from a trend line somewhere. Anyway, I'll have a look at it another time. I'm just having a look at the 4-hour chart, see if I can identify that, but no, can't. Okay. All right. Well, anyway, we did bounce. We did hit. The important thing is we've hit the important resistance level here. Now, if this is the beginning of a bear trend, which I think it is, then we should hold this and we should turn lower. And that's what's happening so far. So we've broken the bull trend. This is now turning into a bear trend. Well, it's already been a bear trend for at least 2 to 3 months. 2 months. But it looks like that bear trend will continue. So I just wanted to make you aware of that. It does look like the dollar's going to head lower. Maybe they will never raise rates. Who knows? That's a fundamental issue that I'm not going to deal with today. But you can see what's going on here. So back down to 94.00 wouldn't be a surprise at all. You can see, I don't need to tell you why that's a decent support level. A couple of lows here, a little high up here. That's the next decent support level on the daily chart at least. And obviously below here, we're going to be retesting these lows down at 93.13. If this is a developing bear market, as I think it is, then it won't take too much to break through there. And I've got a target at 92.50, which is just some Fibonacci stuff that's going on here. So that would be the next big target on the downside if this is a bear market. We've got the 200-day moving average down here at 90.93. Well, that's going to be at least around 91.00, isn't it? By the time we get there, probably a little bit higher than that. In fact, they're the big levels. Obviously, we would need. Well, it's Friday tomorrow, so we would at least need a weekly close tomorrow night above 90. Well, probably above 96, really, to shake any confidence in the bears. So unless that happens, I'm sticking with the bears at the moment. We would need at least a weekly close above there, preferably 2 days close above 96.00 to change my mind on that one. Okay, so unless you've got any questions about the dollar index, I just wanted to make you aware of that. Not wise to be long the dollar, it would appear, even after a good sell-off and a decent recovery. On that note, probably worth sticking with the currency markets and the 4 pairs that I cover are Aussie dollar, Japanese yen, dollar yen, the euro dollar, and the cable, pound versus the dollar. So might as well whiz through those, but as you know, I'm always willing to have a look at any other markets that you might wish for me to have a stab at. Okay, so Aussie dollar, in line with the recent dollar strength. We've had 1, 2, 3, 4, 5 days of this market having a big old pullback, a big plunge. Let me just have a look at my longer term chart here. I won't show it on the screen, but I'll just tell you. Just remind myself of some levels. Oops, hang on a second. Okay, that's better. I'm not going to swap all these time frames around. I'm just going to tell you what I can see on the other markets. Otherwise, it just takes too long with this software. It doesn't work very well doing that. Okay, so 80.50, 80.60 was quite an important level in the Aussie dollar on the rally. We did spike quite a way through that. We got as far as 81.62, but we couldn't close above there on a weekly basis, believe it or not. And then this week, that 80.50 level has capped. So it did play its part after this unexpected spike higher up here on the 14th of May. But you can see that was quite a negative candle. The fact that we spiked up above 80.50 and then closed almost exactly on 80.50, but the spike up, lower close, we all know that's not a particularly positive sign. So that did trigger a decent correction, probably a little bit further than I would have expected it, really. But 78.60, 78.50, great support level down there. We've got some fib support. We've got some previous price action from mid-April highs up there. You can see even through here that 80, 78.60, 78.50 level played a part quite often. So good support there, backed up by the 100-day moving average, which is always useful. And today we've managed to bounce straight off there, which was the idea. We have got quite a challenge at 79.30, and if you follow me on Twitter, you'll know that I posted a trade idea there to sell at 79.30, stop at 79.60 today. You've got intersecting trend lines here and some Fibonacci resistance, and actually you've even got some short-term moving average resistance there. So that looks like a big level. We haven't actually managed to get that far today. If we were to get that far today, I think that's probably worth a short, because although we are very, very oversold in the short term and due a bit of a recovery, at this moment, it doesn't look like it's going to be sustained for too long. Maybe we have to bounce around above this 78.60, 78.50 level for a little bit longer before we can see a break higher. I have still got in the back of my mind, obviously, that the dollar does look weak. So eventually the Aussie dollar can push higher probably, but don't think it's quite ready just yet. Okay, obviously, if we were to close below the 100-day moving average, so if we were to close below 79.40, especially on a weekly basis tomorrow, Friday, then that would be more negative. We could certainly be heading down towards this 77.85 area without too much trouble. We've got May lows around that area as well. 7800, 7800 is the May low currently, 77.95 actually, and then just below there, as I said, we've got this 77.85 area. So 77.95, 77.85 area looks like the next decent support level on the daily chart at least. Okay, so that's pretty much covered that in the very short term. Obviously, we start breaking above 79.50, 79.60. That would be pretty positive. So that's why I've got to stop in at 79.60 on that potential short sell at 79.30. Dollar CAD, yeah, sure, I can go straight to that one for you. I've actually started something. As you probably know, I write daily reports on about 20 markets. I give you an indication of what I think is going to happen and all the important trade levels for the day and everything else. But I've been asked over and over again just to give straight trade signals. Buy here, stop there, target here. And I'm going to start doing, well, I started doing that today just for free on my Twitter account. If you don't follow me on Twitter, it's, there you go. So you'll be getting a bunch of free trade signals for the next week or two while I try that set of service and see how people respond to it. All right, dollar CAD. I probably haven't looked at this since the last time I did a webinar, which would have been about a month ago. So just let me get my bearings on it. Okay. Sorry, I was going to move that chat box. Right, where are we now? We've had a good recovery. Okay. Right, okay. I can see what I'm doing here now. Let me see, I need to go back to 2012. I'm actually going to flick this onto a weekly chart so we can have a slightly longer term perspective on it. Okay, so I need to throw some trend lines on here from further back just to see why we found support, where we found support. Um, okay, no, that isn't what I was thinking that might be. Hang on. Just give me a sec while I go over this, because it's been a while. Okay, no, that trend line hasn't done anything particularly important. We're just hovering above that. Get rid of these. What's going on? Something funny going on with the software there, sorry. You're still with me? Right, why have I lost my chat boxes? Sorry, the software is doing something very strange. It's just kicked me out, so I'm trying to get back in. No idea why that's happened. Right, I think that's fixed it. For some reason it kicked me out, but anyway, I think we're okay now. Okay, so while I lost you there, I drew another couple of trend lines on. Let me just flick back to the daily chart. That's not really telling me an awful lot. Oh, hang on. And throw some fibs on there as well. Okay. Don't think we need that trend line. Sorry, these are old trend lines, so I'm just going to make sure I take off what I don't need. Certainly don't need that one. That's not relevant at all. Okay, right. Starting to get a picture of this now. So again, dollar's been strong against the Canadian. Then the dollar lost some ground. Sorry, then the dollar's been weak against the Canadian, and then the dollar's gained some ground, of course, which fits in with what we've been seeing for the dollar recently. Take that one off. Okay. So we did find some support 38.2 fib. That was at 119.86. We dipped just a little bit below that. Does look like that trend line there has played a good part. You see this little black trend line here. So that one goes back to July 2014, July last year. Perfect trend line, actually. That's just worked very nicely indeed. And even this trend line, which was obviously worth leaving on, has also played a part. That's done certainly very well. We haven't managed to close below there. We've had one or two small spikes below. So this trend line is going to be important again. We managed a good recovery. My guess is that we won't. This is a bounce and a bear trend. So if I was to put some fibs on here, let's see if that actually, yeah, fibs work nicely there too. 122.66 resistance. Where do we get to? 122.55. So we got to within 11 pips for 38.2%. Failure there indicates the fact that, yes, this is a developing bear trend, and this is going to continue to go lower. We didn't even make it as far as 100-day moving average on this chart. So, excuse me. It looks to me like this market is about to turn lower and resume the 1-2 month bear trend. Ties in with what we're saying about the dollar already on that dollar index chart. So the next level to watch is around the 121.40-30 area. That's a little bit of support there, and below there would help reinforce that message that the bears are in control of this market. We should then push down towards this fib level 119.90, 119.80. That's also going to coincide quite nicely with this trend line here by the time we get there over the next few days. So this is going to be crucial, absolutely crucial. If this is turning into a longer-term bear trend, we're going to break that. Maybe not on the first go. Maybe we'll have a little bounce off, depends how oversold we are at that time, short term and on the daily chart. And if we do see a little bounce back, maybe we'll get back up to 121.30-40 area, and maybe that will then be a peak, and maybe then we'll attack this trend line and break through it. So those are the potential scenarios that I'm seeing at the moment. A break lower eventually, looking more likely than not. We've got the trend line here. Yeah. This one, just make sure it's in the right place. Sometimes these trend lines go a bit skew with when you put them on the weekly chart and then you go back to the daily chart. So let's just make sure I've got that absolutely spot on. I think that's absolutely spot on. There we go. Okay. So yeah, that would be obviously if we were to be down there right now, that would be perfect because we've got intersecting trend lines and 200-day moving average. But by the time we get there, of course, it's going to be a different story. We're going to be looking around the 118.30 area. Actually, just let me make sure I've done that trend line correctly. Easy to get these wrong. No, I have done that. Yeah. Okay, so yeah. Break below the trend line here around the 119.70 area would take us down towards 118.25 probably. Well, if we were to break the May lows, we may not even break these May lows until June. And if we do, then we're going to be looking at yeah, probably around this, where are we now, 118.40-30 area, which is probably where the 200-day moving average will be at that time. So that's going to be quite important support. At which stage, what do I look for to determine if the greenback weakness is a recovery instead of a reversal? Okay, well, at the moment, this is weakness. It's not weakness in a recovery. This is the beginning of a bear trend, I think. I don't know the fundamental reason behind that because that's not what I deal with. But the charts are telling me that this is going to be a move which has some legs. I can't really understand it from a fundamental perspective because the economy looks okay and they're still talking about raising rates. But hey, maybe the market's telling us that there's a recession coming. We've had a long recovery, haven't we? We've been, well, stock market wise, since March 2009, we've had one heck of a run. We're entering our 7th year of a bull run, which I must admit seems really overextended. So yeah, okay, maybe I'm not going to dwell on that anymore. But this to me has all the indications that this is a bear trend starting. So let me try and reinforce that. There you go. Look, there's another trend line. That backs it all up. You've got resistance here, 38.2 Fibonacci resistance. You've got this trend line resistance here. Perfect place to get short this market. We're overbought in what is a developing bear trend. This is just perfect. Get short now. If you want a fairly low risk trade, then you could be selling it around the 122. 50-60 area. Oh, actually, we're below that now. We've just missed it. But if you were selling it, if you do get a chance to sell it there, you can stop above sort of 123.10. But I wouldn't be looking for this to be the only way this is going to convince me that this is a correction in a bull trend is if we can get back above the 100-day moving average, 123.48 at the moment. If you were tuned in when I was looking at the dollar index, I was saying to you that the dollar index looks like it's developing a bear trend. All the signs are there. We broke the long-term bull trend, which had gone back almost a year. We broke the 100-day moving average. We revisited that area. That's now acted as resistance perfectly. The candle formation yesterday backs that up. The spike higher, the close below. Today we're heading lower for confirmation on that. So the candle formations are working. The 100-day moving average is working. The trend lines are working. Here you can see I didn't put this equivalent Fibonacci retracement on that dollar index. Maybe I should go back and do it. But again, here you've got this Fibonacci retracement here at 38.2, also holding along with this trend line. There's just all sorts of indications here that this is going to turn lower. Not a market that I personally think you want to be long. I don't know whether that fits in with what you're looking for. But we've also got short-term moving average resistance around the one. Where are we now? Let me just have a look at this. We've got short-term moving average resistance around, give me a second, 122.0510. We're struggling to get back above there now. We did hover above there for a little while yesterday, but we're struggling to get back above there now. So, yeah, it all looks pretty negative, I'm afraid. Yes, I do. I look at 4-hour charts and 1-hour charts mostly. Okay, so. Yeah, just doesn't look good. What can I say? You give me a close above the 100-day moving average and I might change my mind. That would clear this 23.6% fib at 123.10. That would easily clear that short-term 38.2% fib at 122.66. It would also very much clear this trend line. If I was to see a close Friday night above there, I would say, okay, I'm wrong. We've broken up, we've cleared some important resistance levels, and I now think that I have to change my tack, and the bulls are going to get back in control of this market. But right now, that's not happening. This is the 55-day moving average here. This is in purple. It is purple. It probably looks black to you. This line here, and you can see it's not going to be too long before that 55-day moving average crosses over below the 100-day moving average, which is the blue line. That's going to be a further negative confirmation. It doesn't look too good to me. Sorry, I hope that's the answer you were looking for, but I can only tell you what I see. Yeah, I would happily be short this right now. So we've got 121 sort of 30 area. You can see how that fib has worked very, very nicely indeed on several occasions. Little spikes below, but no closing below there initially, and then it worked as good resistance on the way back up. This might act as a little bit of support on the way down. We are just getting a little bit oversold in the short term, so maybe over the next couple of days, this might just hold for even a little bounce back to the trend line, give us another chance to get short. And then maybe we will finally break below there and get this. This will be the key, won't it? 119, 90, 80 area. That's where we've got some 38.2% fib support, trend line support, and everything else. And then, of course, a break below the May lows will add pressure. So I think that's about as clear as I could possibly be on this market. Nice little chart, though. It's giving us lots of clues, which is useful. Oil looks as if it's coming down to correlations are a bit weak. Can't make my mind up about oil. We'll have a look at it. Okay, that's answered all those questions, I think, hasn't it? Yeah, I did think the oil was going to come down. There was a breakout during the week, and I thought, here we go, bear trend resuming. You know, you're always looking for that longer-term trend to resume. I'm not 100% sure now. I just cannot make my mind up on it. There we go. There's oil. Okay, so all my lines are already on there. Hold on. This is just the July contract, actually. When the markets roll over, I tend to just look at the July contract. Okay, so what's key here is that the longer-term fib level is 59.55. You can see we're just poking up above there. Now, that's also a short-term fib as well here at 38.2. And if we get through 59.80, okay, so the key is that 59.55 is the level to watch in the July oil contract. Now, we're holding above there. We spiked a little bit below there this week, and I thought, that's it, you know, bang. I saw this as a little triangle pattern, and although triangle patterns are usually a continuation pattern, I thought we'd broken the base of the triangle, down we go. But really, we've now got oversold very quickly. We were very overbought, so we did need a correction. We've got that correction, and having thought that oil looked quite weak yesterday, or sorry, the day before with that breakout. Hang on, just need to update my short-term chart while I talk to you. Now I'm not so sure. Oversold in what is a 2-month bull trend. Let me put a trend line. Oops. Oh. Right. Let me put a trend line on here. Okay, I think that's probably about as accurate. You can see that we spiked below there. That was also a negative. But we did hold it above 57.45, and we're now pushing back above that trend line, pushing back above 59.55 long-term Fibonacci resistance. So this actually looks all right. If we were to close here, I'd say, okay, that's pretty encouraging. If we were to close above 59.80 on a Friday night and get a weekly close above that trend line and above that fib area, that would also be pretty sexy for oil. We've got some fairly important resistance around 60.10, 60.20. A push above there, that's just short-term resistance. A push above 60.10, 60.40, actually, call it that sort of area. That's quite important. Make a note of that level for tomorrow. Close above 60.40 tomorrow would certainly be would look good for oil in the following week, and then we could be pushing up into the low 61 area, and then of course we've got this little trend line to beat up here around 61.10, 61.30, 61.50 actually it's looking like. So 61.10 is a little bit of a level, but 61.50 on this trend line by the beginning of next week will be important. Push above there, and really all you can say is, well, we had a little spike below the trend line, but now the bulls have got hold of it again. So yeah, I don't know. Maybe oil can actually go higher. Not what I would have said to you 2 days ago, I'll be honest, but you've got to be open-minded, haven't you? And if the market tells you it's going to do something else, then you've got to just go with it and not fight it. 59.55 is the level. Imprint it in your brain. A weekly close above there tomorrow night, I think, looks quite positive for oil. So yeah, sorry, your question was the time with the Canadian dollar. Well, yeah, maybe that will all work. I don't really know. This is the continuation chart for oil, which does look a little bit different to the July contract only. I can never make my mind up as to look at the July contract only or look at the continuation chart with these rollovers. I wish markets wouldn't roll over. It make my life a lot easier. But even on this chart, it looks quite positive. Look, just throwing on some fibs, you've got 57.73, and that really a blip below, and then a very good recovery over the last 2 days. Yeah, what do you call that? A harami. That's a indecision, isn't it? So that's just shown that we couldn't really continue that that bear trend. The break lower should have been followed by a nice big red candle, but we haven't. So yeah, you've got to question whether that was just a little bit of a shake out the weak bulls, and then off we go again. Stochastics on the continuation chart turned quite positive. I've got 59.70 is quite an important level on the continuation chart. See, we're just trying to push above there. I will probably struggle there today. We've got a bit overbought. Also on the continuation chart, we've got 57.54, 57.55 as a decent support level. Well, that actually, I should be having studied this with you now. It does look like I should be looking at the continuation chart because that the levels look a little bit sharper on there. One point to note also is the 200-day moving average on the continuation chart is priced at around 61.22. If we were to close above there on Friday night, although it's a monthly chart, that still would be quite useful, a weekly close above the 200-month moving average. So, do you know what? The oil picture isn't that bad. I don't know if you're a subscriber to my oil report. Maybe that's why you said it looks like it's coming down, because I was quite negative on that the other day, wasn't I? But hey, I do get it wrong. And today I wasn't so negative, I don't think. Above 59.70 anyway, that's going to look certainly a lot more positive. So we need a weekly close tomorrow night above 57.55. A weekly close above 59.70 would be even more positive. And then this little trend line here tomorrow comes in at 60.83. So on the continuation chart, look for a move above 60.80 to be very positive into the end of May. What will change all that? You'll certainly a weekly close below 57.50 would be a big problem for oil, and then I'd reverse back to being quite negative. But you know what? We may just keep going sideways. This might just be a developing pattern. We just keep going sideways. I've been so surprised at how the dollar yen just went sideways for how many weeks was it? Just dead boring. Unfortunately, these markets aren't that exciting at the moment, and maybe that's just what oil will do for another week or two. Just head sideways. Stick with the trend is what I always say, and the trend certainly is sideways at the moment. Wait for the breakout. Okay, are there any other markets you'd like me to look at, or shall I pick one for myself? Gold's always popular. It's not doing much, but I might as well show it to you. Cable. I think have I not done cable? No, you're probably right, I haven't. Okay. I'll just quickly look at gold. I haven't got a lot to say on gold anyway. It's not really doing anything. And then we'll have a look at cable. Cable's quite interesting. So gold. Well, the last 2 months is sort of turning into a bull trend, only just. So I guess you could say that the bulls are sort of in control of this market, but it's not really happening for them, is it? You know, this trend line worked beautifully during the week, or last week and this week, and then we collapsed, which was a bit of a surprise. I think the dollar strength triggered that. Just shows how nervous these bulls are. A bit of dollar strength, and they wallop gold, just like they walloped oil the other day. But we are at least holding this shorter term trend line, which is about 5 weeks old. Now no one knows what to do. These little dojis, or whatever you call them, are showing that we don't know which way to go. Gold is dead boring. You're absolutely right. Yeah, trying to make something out of nothing with gold, to be fair. It is just moving sideways. The levels actually, though, are working really nicely. The 100-day moving average has certainly done its job. You can see that blue line. That's been doing its job for quite a long time now. So even if you're just using that as a sort of get in, get out around the 100-day moving average, that's working quite well as a strategy. The trend lines are working quite well. So it is boring and we're not going anywhere, so I won't bother to talk about it anymore. But at least the levels work. Right, cable. Did I do the euro? I think I did cable, but I'll go over it again anyway. Cable looks good. Cable looks really good. So we are in this nice little bull trend rally, which I was slow to spot, to be fair. But once we got through the 100-day moving average, that looked pretty good. We pulled back to the 100-day moving average. Let me see. I think I've got too many trend lines on here, actually. No, I haven't. Those trend lines are working quite well. I'll take these off. Just gets confusing otherwise. That doesn't need to be on there. That doesn't need to be on there. I'll leave that one on. Okay, so the trend line that is key is this one here, of course. This is the bull trend line going back over a month now. 100-day moving average. Once we broke that, well, we got a little bit overextended, and then we pulled back. Actually, 155.60 was a really important level, and we couldn't break that initially. We stopped out quite a lot below there, but pulled back to 100-day moving average, pulled back to the trend line. You know, lots of reasons to be getting long down here, weren't there? Intersecting trend lines, 100-day moving average, you know, all sorts of reasons. We only closed below it. Well, we did close below it twice, to be fair, but quickly recovered. Anyway, I'm waffling. Right, the dip below the 200-day moving average, that confused me. This was a very confusing day with gold puking, oil puking, dollar having a strong run. I thought that was it. For cable, but we have held this trend line perfectly over the last 2 days, and the third day we're now breaking back, shot back up through the 200-day moving average, so it all looks good. Bulls are saved, stick with the bull trend. I like the fact that we're above the 200-day moving average. What can we do now? Not an awful lot to stop us retesting these highs up at 158.00, 158.14. Bank of England might hike it ahead of the Fed. Yeah, that's what they're talking about, aren't they? I'd love to see it because I'm an expat living abroad earning pounds, so I do hope that does happen. I need a strong pound. So the next big level on the upside, well, of course, it's last week's high up at 158.14, but there is a little bit of resistance up at 158.36, and then we've got a bit of a problem up around the 158.70, 80 level. We've also got a bit of a trend line going on. Actually, no, I'm not going to talk about that one. That's not too important. But we do have the 200-week moving average. So we have got a few barriers. We have got a few obstacles to overcome. We have got the 200-week moving average up at 158.90, 159.00, and we've also got a 50% fib. So the whole down move from July last year, if you look at that, the 50% fib comes in at 158.77. So that high 158.00 area, I know we're looking at 200 pips away from where we are now, but that's going to be quite key if we get through these May highs in the low 158.00 area. And as I say, right now, excuse me, I don't see any reason why we cannot get through there. It does look quite good for the pound, and I should have had this trend line on here because that also, oops. There you go. That trend line there also would have provided good support, which I missed. Must take more time on the analysis. Make sure I don't miss out a trend line. But you can see, yeah, that's all worked rather beautifully, isn't it? That trend line is not relevant. Okay, so yeah, I like cable. Looks good. I'm happy to say because I need it to go up. Just let me check whether I need to have this trend line on there. Yeah, I do actually. You can see that little rising wedge pattern, which is often a little bit negative, but I think that is relevant. So yeah, we've got a little bit of trend line resistance up. I did actually I had strong resistance at 156.70, 80, I think, today for cable with us to try shorts to stop above 157.00. We didn't actually manage to break 157.00, 156.99, and I think that's why I had it, because of that trend line. So just watch that carefully. 156.70, 80 is quite important, but a break above 157.00 makes this look positive again. Just getting a little bit overbought in the short term, but I do think any pullback will be a buying opportunity if we were lucky to see it back down around this 200-day moving average at 155.83. That looks like a good buying opportunity, I think. Cable 160 attracting or too early to say? Yeah, why not? Well, no, we've got to get through 158.70. 159.00. That's the big one. We get through there, yeah, we could be really very quickly up at 160.00, no problem at all. You've got the 100-day moving average up there around the 160.20 area. So yeah, but yeah, we've definitely got to get through 158.70, 159.00. That's the real big challenge ahead for bulls in cable. And there's this little challenge here around the 157.00 area. So 157.00, 158, 158.14, and then 158.70, 159.00, and if we get through there, it's the 100-day moving average target around the low 160 area, 160.20. Those are the big levels to look for in cable. The only thing that would change my mind is if we were to break this trend line. This is absolutely key on the downside. So tomorrow is a week. Is the closing for the week 155. If it closed below 155.00, we'll actually even close below here 154.75. Really, that's the only thing that's going to convince me that there's been a breakdown in cable, and then we've got something to worry about. But this little barrier up here at 157.00 is no big deal, really. Okay, does that answer all the questions on cable? I hope. Yeah, looks good. I'm happy to say. Just hope we can get through that 159.00 area. Okay, I don't know what else to cover now. How long have we got? I think we've still got 5 or 10 minutes. If there's any currency pairs you'd like me to look at, otherwise, euro. Did I not do the euro? I'll do it again. Oh no, I didn't, did I? Sorry, I went straight from the yen to the Canadian dollar. I'm yabbing away really quickly and forgetting what I've covered. Okay, euro certainly not as strong as cable. It's caught somewhere in between the Aussie dollar and cable in the strength stakes, in the strength table. Okay, so we've got a real problem here with the 100-day moving average. We can't seem to get back above there. We'll need a weekly close tomorrow night above there at least. We have got some decent support around 110.30. That's on the weekly Fibonacci levels. We have managed to hold above there, so that's slightly promising. We are holding above 110, 111.10, 111.00, pushing up off there, which is slightly positive. Hang on a sec. Okay, I'll give you some short-term levels in the euro because it's slightly confusing. Obviously, I think that the dollar will weaken, but this doesn't look particularly strong. I know the euro's got all its own problems with Greece and everything else, and increased liquidity through QE and all the other things, and it certainly is showing. I would need to see this at least above 111.60 on the close tonight to be anything like positive. 100-day moving average is always worth keeping an eye on. Okay, so that's at 111.55. You got some short-term fib resistance at 111.60. So 155, 111.55, 111.60 is basically it. That's absolutely key. Above there looks good, looks better. I wouldn't be piling into this one. It certainly looks a lot better. But yeah, above 111.60 looks better. We can target 111.90, 112.20, 112.15, 112.20 would then be the next tricky resistance. Okay, you've got a target at 111.95. Yeah, that's fair enough. That's fair enough. As I say, I'm not overly bullish on this one, but there's no real pattern here. Who knows? Maybe we'll just continue to drift sideways. Do you know what? I just don't really have much conviction with this one. And you know that when I've got something to say, I do say it, but I just don't really have an awful lot to say about the euro. The stochastics don't look very positive. We're holding below the 100-day moving average. If you put a gun to my head and said put a trade on, I would sell it. Right now, I would at least. But yeah, above 111.60, we should see 111.90 at least. Okay, you can't lose. That's a beautiful trade. If you've got your stop in at break even, happy days. That's the way to trade. That is always the way to trade. When the market goes in, when your trade goes into profit, get it up to stop to break even as quickly as possible, and you won't lose money doing that. Okay, nice trade. Yeah, good for you. Sorry, I can't be a bit more convincing on that one, but you've got a good trade there anyway, so you don't need my help on that one. Aussie yen. Yeah, definitely got time for that one before we finish. By the way, my trade signals that I've basically started today, and I will run for free on Twitter for the next 2 weeks at least before I start charging. Cheers, mate. I will be mainly just looking for trade signals in Aussie dollar, dollar yen, euro, cable, probably gold. Probably won't touch oil. It's too volatile and easy to get stopped out. I'm trying to give you very precise levels with very clear cut, sort of 25, 30 pip maximum loss on your trades. With at least the same in a potential profit. Target 1 will be where you trail your stop up, or you can take a profit if you feel like it, but that will be a one-to-one risk-reward scenario. So that's up to you whether you like that ratio, but certainly trailing your stop up to that first target will be what I will be looking for on these trade signal ideas that I'll be giving you. I'm actually getting quite fed up writing reports on 20 markets every day, so I'd quite happily just throw out trade signals all day long and not have to do 3 hours of analysis every morning. But then my bank clients wouldn't pay me. Yeah, sure. It's going to be my Twitter handle, which is day trade signals. There you go. Look me up on Twitter, day trade signals. Follow me on there, and I'll be throwing out maybe 5 or 10 trade ideas during the day. Very clear. All you got to do is enter your order, put your stop in. The only thing you'll have to do is be ready to trail your stop if we hit the first target, and then maybe take profit if we hit the second target. But hopefully I'll be doing all the work for you. Okay, so Aussie dollar versus the yen. Oh, why is it not loaded? Sorry. By the way, in case you ever need me. Oops. That's my email. I don't give it to everyone, but you guys can have it. Which sessions do I trade? Well, I live in Thailand, so I start work at around midnight UK time when the US markets have been shut for a short while. That's when I churn out my reports on 25 different markets, so they're always done before you guys wake up in Europe. But my trade signals will basically will be like this. I will throw them out probably before the market even opens, and you might find that some of these trade signals are way off the market. They might be 30, 40, even 50 pips away from where we are. But what I'm doing is when I trawl through all my markets, I'm going to be finding what I think are the absolute key levels of the day, levels which I think if we get there, you've got to put the trade on. If you're a trader, you sit there for these levels and you've got to put them on. So they may never get hit. I might give you 8 trades and you might only get hit on 3 of them, but I'm hoping, if you get hit on 3 of them, 2 of them will at least be nice winners. And if you trail your stop up when I tell you to, then who knows, you might even not lose on the 3rd one. You may even just scratch it. I'm not going to tell you what I can or can't do. You know what I can or can't do because you've probably been following me for a while. But I will give you your money back if I don't make you money. That's one of my policies. Obviously, I do give 100% refunds. I've been doing that for years. My service isn't for everyone, and if it's not for you, I can just give you your money back. Okay, so dollar yen, Aussie dollar versus the yen. Right. What can I make of this? Well, we're not really doing an awful lot. Okay, well, we've broken the uptrend. We've broken this 1 month uptrend, that's for sure. 200-day moving average is kind of acting as support, at least on a closing basis. We haven't really closed below there yet, having broken above it earlier in the month. If we do close below there, that's not going to look too good, is it? 95.60, 95.70 looks like a bit of a level to me. Where is that moving average? 95.55, yeah. Okay, so 95.55, 95.65, I think that's going to be quite key. If we cannot get back above there, and if we move below 95.20, that's going to look more negative. What's this low here? 95.26. Okay, yeah, that's going to look more negative, and I would see us possibly even quite quickly sinking down to 94.70, 94.60 area. We've got a little bit of this longer-term fib support at 94.50, so that's going to be quite important on the downside. Again, I'm sort of lacking a bit of conviction on this one, but anyway, above 95.70, that looks more positive. We've got some resistance up here at 95, 95, 96.00, so we need to push through there to retest this trend line, which will now, of course, be resistance around the mid 96.5 area, and in the mid 96 area. Yeah, it doesn't look that positive, really, does it? Doesn't look that positive. but it's not really telling me an awful lot. Well, anyway, as long as we're below this trend line and below the 200-day moving average and below 95.65, I'm negative. Above 95.70, I'm a bit more positive, but we'd have to push through 96.10, and then we'd have to get through this trend line. So there are quite a few obstacles on the upside. And obviously, as I say, if we hold below 95.50, that's just a negative. And I think you should be looking for 94.70, 94.60 as a first decent downside target. My pleasure, mate. I've got time to have a look at Gbp, JPY. Sure, why not? Gbp, JPY. I think I'm running over time, but until I get told to stop, I'll keep going. Been a while since I looked at this one. Okay. 1, 2, 3, 4, 5, 6 weeks of rallying. Looks good. Holding above 183.90 looks good. We're certainly well through there. That's the longer chart. What have we got here? December high, 189.63. Oh, breaking above the December high. That looks good, doesn't it? Yeah, this looks pretty good. There, I wouldn't be wanting to get short of this. I don't think you want to be selling into this rally. No. No. Unless Friday we were to close below 189.60. But it doesn't look like, this looks like it's going. We're overbought, definitely, but I don't think anyone wants to pay too much attention to that. That can be a real, that can be something that can lose you a lot of money looking at overbought indicators in a bull market. And this certainly is a very strong bull market. You've got the 55-day moving average crossing back above the 100-day moving average. In fact, all these three moving averages are starting to point higher now, so that looks good. Short-term moving averages are pointing higher. Yeah, I like it. The only thing that I can say is a close below 109.60 tomorrow night would be less positive, but yeah, we are overdue a bit of a correction because we're very overextended. As I say, we've had 6 weeks of rallying. That's pretty good. 6 straight weeks, and actually this rally started back in June of 2012. So we're coming up for 3 years of strength, really. Yeah, okay, no, I like it. This looks good. I think if we do see any correction, you're going to be looking to buy into weakness on this. I'm pleased to say that the pound looks strong, and the yen doesn't particularly. I know the yen's been losing ground against the dollar. That's the only currency that I think the dollar can strengthen against at the moment, and it certainly looks like the pound can strengthen against it too. So if we do get a correction, throw some fibs on your charts and look for some support, I think, and probably use it as a buying opportunity. I don't see any reason not to. The pattern here is, there's just no pattern. I really wish there was something going on here. I could say, oh, look at this pattern, this is really working. All I can really say is, well, we've broken above the December highs, which those highs were the highest point we had seen since 2008. Okay, yeah, October 2008. So that financial crisis, we've recovered more than 50% of that loss that we'd seen, which started back in 2008. Okay, the financial crisis triggered a big crash in this market. We've now recovered over 50% of it, so it looks good. If you're looking for real longer-term targets, 199.70 is your real longer-term target. Oh, I like that. Very good. Nice bit of local lingo there. Thank you very much. Kopun Cab. Okay, I think we're done. Unless anyone else would like to throw anything else up. Listen, I've given you my email address. Feel free to email me if you suddenly think, oh, I wish you'd looked at that for me. Just throw me an email or contact me on Twitter, and I'll throw up a chart and give you my best guidance on it. Thanks very much, guys. I enjoyed that, actually. There's a couple of good charts in there. The pound certainly does look good, I'm happy to say. And I think that dollar is going to continue lower. Oil, I'm not sure about. Well, that'll be interesting to watch over the next couple of days. Thanks very much, guys. Cheers. In case you don't know my website, please take a look. I've given you my Twitter handle. Please make sure you follow me on Twitter, because I'm going to be throwing out loads of free trade signals. And as you know, I always throw lots of free reports out here, which is exactly what our subscribers get. So if you haven't seen them, take a look. I put loads up yesterday. I think I've put some up today. I think I put the US stock markets up there, which are quite important. I wish I'd shown you the E-mini S&P. Just going to flick that chart on now before someone tells me to shut up. And just show you, I want you to just be aware of something on the US stock markets. Looks like we're in for a bit of a correction. This E-mini S&P chart here doesn't look particularly positive, only in the very, very short term. Of course, I'm not suggesting that this bull market is about to reverse, but I don't like these two little candles up here. You see these kind of doji things that are going on with the spike higher and the lower, and the little red bodies. 21.15 is obviously a decent support level. You can figure that out from your own Fibonacci levels, and we've got these little spot highs up here around 21.13. So 21.16, 21.13 is good support, holding perfectly so far today, as indeed it should do. But I've got a feeling that's going to break sooner or later. We're just going to head a little bit lower. 21.0504 is a nice fib to look at. If we were to get down here, well, we'd have to get down there very sharply for all these to coincide. The 55-day, the uptrend bull line, and the 61.8. Don't see us that low, but anyway, okay. I think that's my signal to end. Thanks very much indeed, guys.